Hello everyone, this is the pre-market report video for 20th June 2023 in terms of Nifty and Bank Nifty. Last night US market was on holiday but other Asian markets and European market was open along with the Indian market. So first let's have a quick look on what happened on Indian market and European market yesterday and then we can discuss about what we can expect today. Yesterday, Nifty opened positive of 45 points and reached almost the all-time high value, and within next 45 minutes, it dropped around 50 points, and in the next 1 hour, it lost another 50 points. Then till 1 o'clock, it maintained between 18,770 and 18,800. Again, negative European market opening erases another 50 points on top of it, and in the final hour it recovered some. The selling pressure on Bank Nifty index heavyweights was much heavier than other Nifty stocks. For example, both Sensex and Nifty dropped by just around 0.35%, whereas Bank Nifty dropped almost double, negative 0.7%. Then yesterday, after 4 days of buying, FII turned sellers. They did net sold for approximately 1030 crore rupees, and even DIA too turned sellers, but not much. Actually, they sold shares worth approximately 360 crore rupees. Ideally, we should have the low trade volume because of US market close, but our market trade volume was completely normal, whereas all European markets trade volume was almost half of their original usual volume. It's not Indian market. As I said in my last pre-market video, last week lots of index across the world reached the all-time high value, or at least 52-week high kind of. So there was a broad-based profit booking across Asian stocks. Then coming to European market, it opened negative and ended further negative. I hope you guys remember, last year there was an energy crisis in Europe. So in order to avoid those kind of similar energy crisis this year's winter in Europe, all European countries had their negotiations under the Sweden presidency for energy reforms. Here, I'll tell the story. Basically, partial developed countries like Poland and other Eastern European countries wants the coal subsidiary power production to extend potentially until 2028. And also, this might help to prevent the energy issue in Europe in winter. But the developed countries like Germany, Austria, Belgium and Luxembourg voted against it since it will undermine Europe's goals to fight climate change. They said for the climate change, but the real reason it will level the playing field. For example, as per the new European climate carbon tax, after October this year, any product from anywhere in the world that's from coal powered means, then the European government will impose 50% tax on it. So the cheap labor advantage on both Eastern Europe and Asia will be nullified. And that's the reason all the developed European countries were against it. Anyway, this failed agreement in Europe for the energy reforms deteriorated the global sentiment further into the negative zone. Even the US future market is trading 0.3 to 0.5% negative. In terms of oil, it too dropped around 0.5%, and at the time of this video, WTI crude oil was trading near $71.5 per barrel and Brent crude oil was around $76 per barrel. Then regarding SGX Nifty at 3 am Indian Standard Time, it closed at 18,826, which is kind of indicating around 60 points gap down opening today. So that's all about what happened on yesterday. Now coming to today Indian market related info. First, I think most of the people know this, but still telling for those who don't know, from June 30 onwards, the entire trading of SGX Nifty will cease to operate. And that will operate under the new name Gift Nifty, not based on Singapore rather than based on Ahmedabad Gift City. Then the second info I like to highlight is about HDFC Asset Management. Last night on the Twitter page, Standard Chartered mentioned that today they are going to sell over 4,000 crore rupees worth of HDFC Asset Management at the discount of 4 to 5%. They made a call for bulk buyers. I'm guessing it's negative. And also, I don't have 4,000 crore rupees, so no bother. Finally, SBI released the paper yesterday that the withdrawal of 2,000 rupees currency notes will boost the bank deposits repayment of loans and have a positive impact on the whole banking sector. I hope you guys remember, Even on the withdrawal day itself, we discussed this, that this withdrawal will increase the banking business. Anyway, now they released this as report, so maybe it is positive for banking today. As a summary, at present global momentum is marginally negative and also there are some negativity in the SX Nifty. However, today morning before our market opening, there will be a Chinese central bank interest rate decision. At present, the expectation is to cut 10 basis point to 3.55%. If it happens or if they cut more than that, then it will impact very positive and this will make the Asian market immediately to trade positive. So watch out for this, especially for metal stocks. Then during our market hours from 12:30 pm to 2:30 pm, there is a schedule for release of Germany's PPI and Europe's current account. And in the night, various US housing related macros are due. One more thing, there is a schedule for the interview of FOMC member Williams. Coming to technical, on the daily chart, if we combine the last 2 days, then Nifty forms a bearish dark cloud cover pattern. The trading psychology behind this pattern is that buyers pushed the price higher at the market opening, but sellers took control of it later in the session and pushed the price sharply lower. This shift from buying to selling indicates that a price reversal. I mean, in the last 1.5 weeks, we can almost say 3 to 4 trend reversals. Anyway, this pattern is more significant when we are in the uptrend and the market currently in the uptrend. However, still Nifty is holding higher high and higher low series formation, which is kind of supporting the further uptrend from the current levels. So, it's really confusing. 10-day exponential moving average 18,680 is the important level. So, as long as Nifty trades above those level, it could retest 18,850 to 18,900. On the other hand, below 18,680, investors might prefer to exit from the trading long positions as the index could slip till 18,650 to 18,550. In terms of Bank Nifty, it too forms the similar candle. It drops up to 43,500 and finally closed at 43,630. So now 50-day exponential moving average 43,250 can be a key level to look out for. Moving on, based on option change in open interest, significant number of put options unwound between 18,700 to 18,850. Huge number of nearby call options were added at above 18,800. The maximum new nearby call options added at 19,000. So 19,000 is the strong resistance for the expiry to break. And next point, 18,850 is the immediate resistance. Then from overall options open interest data, 18,700 got the maximum put options followed by 18,600. Since 18,700 is the short straddle, thus 18,600 is the immediate support to look out and 18,500 is the strong support for this expiry. Then coming to Bank Nifty, based on overall options open interest data, significant short straddle is between 43,500 to 44,000. Then the nearby maximum call option open interest is present at 44,000. So 44,000 is the resistance to break. Regarding put option open interest, 43,000 is the next nearby maximum put options without call options. Thus 43,000 is the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.